Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Monday, the 21st of July, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go through our slightly altered webinar here for a Monday where we take a look at a slightly bigger picture of the week, both last week and the week coming in here. So a review of last week's activity, what were the major fundamental, geopolitical, macroeconomic, central bank, market-defining factors that influenced the major financial markets, particularly focusing on stock indices, which most of our traders are trading. We'll also take a look at the week ahead and what we've got coming up. Where are the potential volatility points? Where you want to adapt your trading style? This is the reason we do this. Yes, we're day trading at trade day. Yes, most of you guys are very short-term trading. You should certainly still know where the potential volatility points are going to be coming in the week. Are you more likely to be a little bit more cautious? Are you going to be more aggressive, depending on what the expectations for volatility are, given that we could have various factors in play that are going to increase the volatility in the market. So we have two products or two reports that we put out. One's the summary, which is this one here, the macro summary. You can see it's a short 2-page set of bullet points, and it's a couple of tables in here covering pretty much up here what went on last week, what were the moves in the markets, and what is key coming up this week on central banks, data and earnings, if we're in the earnings season, and there are the tables on the macro data and earnings. So that's the summary version. We have and you'll get that if you're watching this in the members area. Below where you are in the members area, we have 3 columns. The left-hand column is our technical analysis that goes out daily, covering, we'll come to that shortly, but you can see in here, covering the major bond futures, 30 years, 10 years, 5 years, and 2 years in the US. Also covering the major stock indices of the S&P 500 and the NASDAQ. And then for our commodity traders, looking at gold and oil. So we have those in the left-hand column. In the central column going up at the weekend, usually on a Sunday, we have the macro summary and the macro matters. So these in here, the macro matters, you can see a 4-page more detail. Look at the review of last week and what we have coming up this week. The macro summary, pretty much the summary of that macro matter. So we'll go through, we'll take a look at the macro matters. You can see last week, yet new record highs by the S&P and the NASDAQ. The S&P up 0.6%, the NASDAQ up 1.5%. Russell 2000 and the small caps, more modest gains. Dow Jones actually slipped on the week in here. Still some caution, but markets around tariffs, but markets kind of shrugging that off. Also concerns around Trump firing Powell, which is an ongoing a story that's not going away in here. Still in the news in here over the weekend and going into this morning, but markets seem a little bit more upbeat this morning, but they shrugged off that last week anyway. We also had US CPI last week and retail sales data. US CPI was predicted to be up and expected to be up, but some of the tariff impacts start to kick in on various markets and various pricing. And despite CPI being higher as expected in here, both headline and core numbers, they were actually higher, but up by less than expected. So that's seen as a positive. On the retail sales side, the US consumer stays strong and continues to purchase, and the retail sales data remain resilient and positive. Earnings season really kicked in earnest. We'll come to the earnings shortly going into this week, but we kicked off with the financials as we always do. JP Morgan, Goldman Sachs, Citigroup in here, all positive beats. And just incidentally, we've had 12% in this first week in proper of the earnings season. 12% of S&P companies had reported as of Friday, and they had beaten by an impressive 86% topped estimates, well above the long-term average, that is, on beating estimates. It should be noted, though, that we do have the expectations for earnings have been ratcheted down in here going into that in here. So look, that said, the bar of earnings was lowered heading into the quarter, with forecast for year-over-year growth revised down to 5% generally. That's because of concerns around potentially a slowing US economy due to the impact of tariffs. So the earnings have been ratcheted down, but at the moment so far we're beating those earnings, and they stay in focus going into this week. On the data front is fairly light. We do get global flash PMI data. I'll run through the weekly calendar in a second, but we do get global flash PMI data. That's coming up on. I'll come to the calendar soon, but I think it's Wednesday or Thursday in here. But we'll come to that shortly. And then we also get amongst the big names coming up this week, both Google and Tesla are reporting. Also, central banks are in place, so but not the Fed. That's till next week. Remember, the Fed now on their blackout period, so no Fed speakers, or we do get Fed speakers. They won't be talking about monetary policy because they're on that blackout period. We do get the PBOC, or I had the PBOC already in here on Monday. Get Reserve Bank of Australia meeting minutes Tuesday, and then we get the ECB on Thursday, but we're not anticipating any change from the ECB. On the data front, as I said, the PMI is the main data. That's Thursday, global flash PMI. You can see in here nothing of real note the first couple of days of this week out of the, even the first 3 days. Existing home sales is not really a big piece of data. So Monday through Wednesday is very, very light out the US. Then we get, it's not even US data as such, we get global flash PMI data coming through on Thursday alongside, and then the ECB, as I mentioned, and then nothing really significant apart from durable goods to finish off the week on Friday. So it is very, very light. Global flash PMI data is the main focus of the week for the global economy and for the US. We do get on the Verizon today, Coca-Cola, but really the big focus is going to be Alphabet, aka Google, and Tesla, both coming out on Wednesday this week. So really the focus, Alphabet / Google on Wednesday, and Tesla also, and then Thursday, the global flash PMI data. So that's what we've got coming out. So you can see in here, we looked on the data today in here, there's nothing in there, right? It's absolutely dead. And we go for this week and you'll see there's very little of kind of note coming out of the US. If I just sort it now on my filters and go US only, if I clear and then hit US, you'll see in here, and we just go for the big data in here. We just go for go for 2 and 3, right? Even if we go for the second tier data in here, you'll see nothing of real note in here coming through this week. Look, Monday through Wednesday, nothing. And then we've got that S&P Global flash PMI data on Thursday, and then durable goods Friday. So it's very, very, very light in here. Turning our attention to the earnings sector. So we've got now Verizon's already out. We've already got that on the tapes already. You can see in here green beating, and then we've got Coca-Cola, Philip Morris tomorrow. Not usually big mark. What we're looking at here is what, and it's usually the big tech, right? So Coca-Cola is very much like a defensive stock. Doesn't give Gap many surprises. It's not going to impact massively into the S&P or the Nasdaq. Similar safe with Philip Morris in here, but maybe Texas Instruments, that sometimes has a little bit of a move on markets. But what we're really looking at is those large cap, potentially growth stocks, tech stocks, that really drive the US and global economy, and the reflections of growth in here. So we're looking at Alphabet, aka Google, in here on Wednesday. Remember, these are after the bell. The big tech stuff's always after the bell, after the close. So Alphabet, aka Google, after the close, and Tesla after the close on Wednesday. So they're going to be important. IBM as well, potentially watching that on Wednesday as well. And then again, it dries up a little bit. Blackstone, Honeywell, Intel's probably going to be more important there to watch on Thursday. Again, that's after the bell. And then into the end of the week, Friday, it's fairly quiet. So really the focus Wednesday, potentially into Thursday on the earnings side. As I mentioned already, we go to the Fed in here. We're in the blackout period here in July. The meeting is next week, 29th and 30th, with the result coming on 30th. No rate change anticipated in here, but we do have the Fed now on blackout. So you might have seen, if I go back to the calendar in here, so you've got Bowman speaking, Powell speaking tomorrow, but they won't be talking about interest rates, okay, if they are speaking, because they're in that blackout period. Let's move on to some of the news headlines in here for this morning. Wall Street hunting for the perfect Powell hedge from the Bloomberg Morning Briefing Americas in here. Still concerns around this Trump versus Powell. Will he fire him, or will he not fire him? Can he fire him, or can he not fire him? And investors working out to position themselves. In some ways, on the upside, the positive side of things in here, what you'll see is, if he does fire him and put someone in who's more willing to ease interest rates, then we could see lower interest rates earlier. So short-end interest rates potentially coming down. So look, lowering short-term yields, but then there will be concern that, they shouldn't be cutting rates at this point. It's potentially inflationary. and then that would push up longer term yields in here. So that's the concern in here, that we would have a potential steepening of the yield curve in here, and it wouldn't necessarily be good for the economy. We could see stock indices actually sell off in here. So we're going to have to wait and see on that one in here. So and then on the trade side, the European Union was set to meet as early as this week's forming a plan for measures sort of no deal scenario. So what if at the moment the EU have not got a deal? Remember, August the 1st is the new deadline. There's no deal in place at the moment, and the clock is ticking. We've only got a week and a half or so until that comes into play in here. Moving on, Wall Street futures actually higher though this morning on trade hopes in here. Earnings kick into higher gear out of Reuters. Edge higher around the price of trade deals between the US and its key partners. So really talking about that focus potentially with the EU. US stock futures climbing, busy week for earnings. We've already kind of covered that. Fed will keep Trump waiting amid a wave of global rate cuts. So despite rate cuts coming elsewhere, the Fed are in no rush to cut rates in here at the moment. And Trump threats send Wall Street hunting for a perfect power hedge. We've already kind of discussed that. How does Wall Street play that one? But globally, markets are faring okay. Nikkei slightly down here overnight, down 2/10, but the Hang Seng up nearly 7/10. European exchange is fairly unchanged in here, with the UK FTSE just down the 10th, German DAX just under 2/10, but the French CAC down 4/10 this morning. But US stock average is actually up this morning. So we've got the S&P's up 2/10, 0.25% up on the NASDAQ going into today. Back into the interest rate market. So you can see in here pretty much no chance of a rate change in here at the July meeting next week. Markets continue to price in a likely cut in here at the September meeting. 37% chance saying we're still unchanged in September. By the time we get to October, only an 18% chance unchanged, and then creeping up here that by the late October meeting, we're actually up. There's like a 33% chance we've had 50 basis points of cuts. And if we go to the December meeting, certainly the market's priced in like no chance of unchanged really in here. Very much anticipating at least 2 cuts and potential for even 3 cuts. So 2 cuts priced in really, which is what the Fed have told us they're going to deliver. So this outlook has not been changing. We've been covering this over the last few weeks, and there's been no real change in that dynamic. Probably not much change in this dynamic now until we get to the Fed meeting next week and get some more information potentially out from the Fed. Moving on to yields, we had a significant move. We spoke about this last week, with the market kind of been caught really in the 10-year between like besides this spike down to lower yields and this spike up to higher yields this year. The market's been pretty much caught between like 420 and 460, and was moving towards the upper end of that range last week, but rolled back down to lower yields. And this morning we've seen a significant move to higher prices, lower yields in here. And the bonds, though, as we said in here on our coverage here, we've had a slight rebound, obviously a further rebound to higher prices but we remain, our outlook remains bearish on price and looking for higher yields. On the S&P and the NASDAQ, we remain bullish. Markets pretty much ending right up near those highs, and obviously up higher again in here this morning. So the market's looking to add to the all-time highs as we go into the beginning of this week. But obviously, and it's a very light data week, so maybe a fairly quiet potential start to the week, Monday through Tuesday, and then looking for anything coming out of earnings. We're going to get nothing out of the Fed, remember. So maybe watching for tariff developments, maybe watching for anything coming out of the White House, out of Trump regarding Powell. That's going to be the impetus maybe for the first part of the week. But the technical outlook remains bullish. Markets have been grinding, the S&P and NASDAQ grinding to new highs, and expect more of that to come into the middle of this week ahead of the earnings. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day and a great trading week. Take care, stay safe, and we're back with you with another Bull versus Bear webinar on Tuesday.